So 30,000 feet, it seems to me your view is that, A, these pockets of froth, or whatever you want to call it, aren't new. They're comparable to things that we saw a decade ago or even before that. They're a function of money supply, I think, is your view. I guess the question is, do they bother you? Do you think it makes people question the systemic health of the market at large?
Well, there's sort of two answers to that. I mean, as you brought up, I mean, people think this is new. It completely isn't. If you go back to a Fortune magazine cover that I sent you, it said Trader Nation, and that was 1999. And one of the taglines was, they can break you or make you rich. So that's what we're going through today. And this was in 1999. So it's not new. What's new is the fact that these traders are armed with stimulus checks. They can organize more easily on things like Wall Street bets. They can work from home, and there's no cost trading. So those are the differences. But, you know, this has happened in the past. I think it's a good thing what's going on, because if this gets people into the market, only about 55% of the population owns stocks. It's the greatest wealth creator, you know, over time that there is. And so if it gets people interested in investing, that's great. What I don't like is when you have people sort of taking out mortgages on their homes and putting themselves in risk if the thing, you know, collapses. You want to be able to, you know, invest what you can afford to lose if you're going to play in something like this, because it is just gambling. And there's nothing wrong with that if that gets you interested in the markets, but you don't want to put your family at risk. And that's where I have an issue with some of the advice being given.
So the activity and the price action and the tolerance for volatility and the different constituencies, whether that's good or bad, I wonder, is it making you bend the rules, your traditional playbook rules, because things that you thought were largely impossible, huge dilution resulting in a higher price, for example, aren't happening the way they have in legacy times? So are you having to change the way you think about the market?
You know, not really. I mean, I've been doing this, unfortunately or fortunately, long enough where I started in the business in 1990. And I remember in 1990, you may remember this, some of you, but you had a biotech boom in the late 80s where every company was going to cure cancer. And so, you know, you had that going on back then, and you had this big boom, and then you had the recession, things collapsed. 2000, you obviously had the internet boom, and some of you may remember this, but companies would change their names and just put .com at the back of their names, and the stocks would double overnight. So that's not any different than what's going on right now. I mean, it's just, you know, you have a generation of traders, some that weren't even born back in the late 90s. So, you know, but what it's making me do differently to your other part of your question is that on names where I go, okay, there's a large retail component, there's a large short interest, it might be something targeted by Wall Street bets. For now, I'm sort of saying, okay, just stay away from that. But my view is pretty simple. When we get to the point, and I think we will by late this year, when the Fed starts to take away the easy money, because don't forget, the Fed balance sheet last year expanded by 77%. Money supply right now is up 18%. The prior peak was 14. That money supply number had gotten up to 27%. So that tells you how much free money is just floating around, driving up everything. When the Fed backs off of that with tapering, I think that's when you can go in and say, okay, we can potentially go after and short some of these highly overvalued names, because then the free money starts to disappear and you actually start to contract some of that free money. And that's when things start to get dangerous on the downside. Right now, you know, there's nothing that says AMC stock can't double, triple, quadruple from here. Much like GameStop, right? GameStop went from $6 to 250 or so today. So you want to stay away from this stuff right now, I think, unless you're doing it in very small size
and Dan,
and you have a basket of them.